Okay, it's March 29th, and I just got the latest Case-Shiller data. So if you're at realestategoto.com, just hit Case-Shiller to come to this page. The data is through January 2022, but it's a 3-month moving average, so it's really uh, November, December, January. So it's kind of the November average. Phoenix has still got over the 12 months moving average. This is inflation adjusted. Phoenix still has the highest appreciation at 22% appreciation adjusted for inflation over the last 12 months. Wild. But everybody's still positive. Here's house price momentum. This is where I compare the appreciation over the last 12 months over the previous 12 months. Interesting story here is that some, like Minneapolis, Cleveland, Washington, D.C., and Boston, are only 1% appreciation higher in the last 12 months than the previous 12 months. Here's the standard Case-Shiller data where they use the January 2000 as the baseline and go from there. You can see we're a lot higher than the peak in 2006. Here's looking at the price appreciation over the previous 12 months, starting in 2016. And you can see that until a lot of them increased, skyrocketed from mid 2020 to mid 2021. So last summer, most of them peaked. Right now, Phoenix still has the highest, and this is nominal appreciation at 33%. Oh, in 12 months. But it's flattened out. But you can see, interestingly, Tampa and Miami are still going up pretty steeply. If you want to see them, you can click on over here on Tampa and just bring up Tampa or just bring up Miami just to see that individual line. Another interesting factor is some are actually falling pretty quickly, like New York fell, Detroit fell. What else? Minneapolis a bit. DC, what's going on with DC? And this is where I take and move the baseline back to the year 1990 for those cities where Case-Shiller has data back to 1990. And you can see something really interesting here is that in the first, what, 6, 7 years of 1990s, prices were falling in some places like LA or flat. There were a few places where it was increasing. There was Portland was going up fast, Denver, and also later on Seattle. So when you use 1990 as a baseline, the ones that are highest here are Portland, Seattle, Denver's in there someplace. And that's because it's including when we go back to 1990, it includes their appreciation in the early 90s where most of the other metros were flat or falling. Okay, here's the Case-Shiller adjusted for inflation using 1990 as a baseline. You can see a lot of places prices were falling for years. LA, where are we? This is so 6 years they were falling in LA, and they fell a lot. That was like a 40% fall in real inflation adjusted prices. Yikes. Or at the same time, Portland was up 50%. The big story now is interest rates are skyrocketing. This data is only through January, so it only catches a little bit of the latest increases in mortgage rates. But holy mackerel, look what's happening here. This is looking at if you had $1,000 of mortgage payment, and this is just for principal and interest. If you had $1,000 principal and interest mortgage payment, how much could you borrow? Well, at the top here, you could borrow almost $250,000. Now it's 200, so you can borrow $50,000 less per $1,000 of monthly mortgage. Data for February and March, we know interest rates continue going up, so that's going to fall quickly. Here's my favorite graph where I take the Case-Shiller Home Price Index and adjust it for inflation and mortgage rates. But then the mortgage rate depends not just on the price, but how much your down payment was. You can adjust for down payment. And also your mortgage payment isn't just your principal and interest. It's also going to be taxes and other things. So here you can adjust for how much of the mortgage payment is actually principal and interest. And you get, look how fast it's going up there. It's like 112. 112 is like in 2005. Whoa. And we know it's going to go up a little more in the next couple months for sure, as interest rates are increasing. Okay, one final thing on this page is this is looking at per capita. I did a lot of stuff here on per capita income. I need to clean it up. It's kind of hodgepodge at the bottom. But one thing that surprised me is that Phoenix, yikes, Phoenix has, of all these metros, has the lowest per capita income until I guess might be Las Vegas now. lower than Charlotte, lower than Atlanta, Portland. Okay, one last thing. Let's go back to the top. And the Fred graphs, these are Federal Reserve charts that I put together. One's related to housing. I put them all onto one page. So let's look at that. So you can scroll down a little bit. I group them, and then they take a while to load. But you can see what's going on with prices and a lot of other things. It's a really nice, this graph. Oh, you can also change the time. This one, the dates, you can move that out there. But this is a very uh, But if you want to get a good feel for what's going on in the real estate market, just check out all these graphs to give you a nice overview of what's happening. Great. Hope you enjoyed this. If you do, tell your friends.